Welcome back. You're watching Power Breakfast on CNBC TV 18. Now, after the furore, all the startups have gotten a relief from angel tax, at least for now. The tax department officials have been told not to take any coercive action. The controversial angel tax was introduced in 2012. This is basically a 30% tax on angel funding received by startups at a valuation higher than its fair market value. The determination of this fair market value has caused some heartburn across the startups. Timsi Jaipuria is here with all those details. Timsi.
Well, what we understand from sources, and not just sources, even CNBC TV 18 has a copy of the circular. The angel tax issue for now has rested. CBDT has written to all its officers, to commissioners, to not go in for any coercive action to recover the outstanding dues when it comes to dealing with startups. CBDT has very clearly in a circular issued has said, and let me quote the circular, that no coercive measure to recover outstanding demand in case of startups should be taken. And I quote, fresh representations have been received, thus no coercive measures to recover dues should be taken until further orders. Now, this circular makes it very clear that despite there being an order issued to the office of CBDT, to various commissioners, etc., that no startup should be harassed when it comes to the IT notices being sent to recover dues. But yes, after receiving fresh representations from startups, CBDT has categorically mentioned in a circular that fresh representations have been received by CBDT from startups and no coercive action to recover outstanding dues should be taken from startups until further orders. Now, let me get to some background to this story. The angel tax issue has been reoccurring again and again in the last 1 year per se, where the startups have been trying to write to CBDT, trying to write to DIPP, etc., that they have been sent IT notices for recovering dues when it comes to the calculation of valuation and the tax arising on their valuations. Remember, under the Startup India campaign, what government had clearly said that the valuations which will be certified by DIPP will be treated as the common valuation, but not every startup has gone to DIPP to get it valued, to get a recognition from DIPP. Thus, the issue is arising, and now government has said it very clearly, until further orders, no tax notice will be sent to startups. So here's a relief coming in for startups. Back to you.
Okay, thank you, Timsi, for that. So a bit of relief coming in for the startups. But let's move on. South Africa-based Radiant-KKR has joined hands with private equity firm KKR to acquire majority stake in Max Healthcare. Now, the deal will be structured and completed through a series of transactions, but here is the bottom line. Now, after deal closure, KKR will own just under 52% stake. Avail, the promoter of Radiant, will own around 22% stake, and Analjit Singh of Max India will own 7% stake and will be classified as non-promoter. Now, the deal is likely to create the largest hospital network in North India and the third largest healthcare company in India in terms of revenue. Now, here is what Avail of Radiant and Sanjay Nair of KKR had to say on the deal with Max Life and why they believe that this is the right fit.
So this essentially also coupled with our facility in Delhi, further increases the leadership position with respect to providing high-end quaternary care. So between the two hospitals, this should emerge as the third largest healthcare company in India in terms of revenue and perhaps the fourth largest in terms of size. The deal has been done at the same valuation as the acquiring Life, which is 80 rupees a share. I think the listing timeline should be anything between 8 to 12 months.
This basically results in a pure play healthcare listed entity, as Max India will demerge its non-healthcare business, and Radiant, that we are already a partner with Avail, will basically buy out Life Healthcare in Max Healthcare. It's a very fragmented sector. We need to consolidate. We need to bring in a lot of efficiencies, which I think Radiant and Max Healthcare will bring in through synergies and smarter procurement, better clinical service. And I think, sky's the limit. There's probably more consolidation in the sector ahead here.
All right, with that, we move on to a quick programming reminder. Remember, CNBC TV 18 launches a special initiative in partnership with the National Stock Exchange. Every month, we tell you how investing in the stock market or equities makes one financially disciplined. This is a monthly program to inform and educate investors about smart investing and enabling the journey to wealth creation. Catch our special coverage all through the day only on CNBC TV 18.